Does I leave the slide up? Stop sharing?
You can leave the slide up. It's a great way
Okay.
to start. At least people see the topic straight away. It looks nice. Yeah. In the meantime, let's say welcome everyone, those who have joined already. Uh, it is now just 30 seconds to 1, but we're going to give a few more minutes for everyone to join in. We'll probably start about just 1:05.
Yes,
Let's
give everyone a
give,
chance to get a cup of coffee or something
yeah,
stronger. And yeah, start at
yeah,
5 past if that's in order.
yeah. I don't know if anyone else was watching the cricket. Yeah, they need a bit of something to calm their nerves after watching that. But yeah, people probably took the morning to watch that and now join us for the rest of the afternoon. So thank you for joining us.
So which is going to be more interesting?
I can't tell you. We'll see.
I'm backing Mario.
Yeah.
You guys stands on the right team.
Absolutely. Okay, so for everyone that's joining, I can see that they're piling in. We'll start a few minutes after that, about at 5 past, to give you a chance, get what you need, so you can give your full concentration on the topic at hand. A very important topic. And we'll start promptly at 5 past. Mario, you'll give us a break midway?
I will. Yeah. So
Okay.
it's around about 2:30. Is that right?
Yeah.
Was that about halfway?
I don't think a lot of us have concentration span for more than an hour.
Can even do 2 short breaks.
It's up to you. You want to break after each hour? Well, you'll play it by ear. Let's see how we go.
Okay.
You
Yeah,
see
see
people
how the
yawning.
flow goes at the time. Yeah.
Okay, yeah.
Yeah, just some admin. The Q&A section is running, and so is this chat. So for those who need to ask questions are able to do it in the Q&A. Those who just want to chat to other audience members can also do it in the chat function. And so, yeah.
Okay, another 2 minutes, and then we'll be ready to start. Certificates will be sent straight after to those that have settled the invoices, and still a chance to do that this afternoon if you want your certificate today. Otherwise, whenever you can, that'll be appreciated. And yeah, so just give us another minute and we'll be ready to go. Okay, so a minute to go. We'll just a short introduction, although Mario Physicus does not really need an introduction. Famous for ethics in the country and the go-to guy, and always an interesting afternoon. So since he's an avid photographer, ask you all to focus on the topic. And Mario, I think you can take it away. It's your floor's yours.
Great, Stan.
Sorry, there will be a couple of breaks in between. We'll just play that by ear. Maybe one, maybe two. I'll leave it to Mario to handle that. Thanks very much.
Great. Thanks. Good afternoon, ladies and gents. The slide handouts will be distributed. My CV's on there. I've been doing fraud risk management for close to 30 years. And my passion is ethics, because that's the root cause of most of what's wrong in the business world, lack of ethics. So we're going to do a short introduction, and then we're going to look at some ethics management frameworks, and then dive into what is an ethics risk assessment. We're going to look at the why, when, what, how, what, and so on. And then most importantly, we're going to look at how do you address these exposed issues? What's the point of doing a risk assessment, but we don't fix what we find is wrong? So the ethics risk assessment is not just to find out what's wrong, but also the opportunities, what's working. Let's build on those and let's manage the risks and try and eliminate the risks. There are many books on business ethics, hundreds. And the one that is my favorite is a South African book, Business Ethics, by Van Vuuren and Rousseau. And that's what I base my ethics risk assessments and training on. So why worry about ethics? Well, let's take your organization. You've got stakeholders, customers, vendors, people that interact with you. So why should they choose you over anybody else? There are three things that would sway those decisions. That person trusting their own knowledge and skills to reduce any risk with dealing with your organization. What does the market say? What about legislation? Are there any court cases or any people suing you or your organization? What about public opinion? What is the public saying? What does Hello Peter say? What do Google reviews say? Are people praising your company? How many stars do you get out of 5? And of course, the stakeholder can trust in your capabilities and your efforts. Are you an ethical person based on their dealings with you? And that's what it boils down to. How long have we known each other? Do we trust each other? Trust comes over time. And my suggestion is do not base your due diligence on other people's due diligence, because they can make mistakes. So rather do your own due diligence. Let's take Steinhoff. So Steinhoff was buying companies not with cash, because they didn't have cash. The CEO is taking most of it. They bought it with their shares, which were based on false numbers. So you take Techie Town. Bram van Heestien was the founder of Techie Town, and his company was bought with shares which are now practically worthless. And Carte Blanche interviewed him and said, I suppose you did your due diligence. And here's his answer.
Steinhoff had already bought Pepcor from Christo Visa for $5.7 billion, making Visa the biggest Steinhoff shareholder and its chairman. Then Steinhoff made an offer to Bram for Techie Town.
Now, you'd obviously done your due diligence. You knew and trusted Marcus Jooste.
My due diligence more consisted out of following Dr. Visa, because, I mean, who am I to argue what he was doing? Everything looked fine to me.
I love that comment. You obviously did your due diligence. No, it's not obvious. He looked at what Christo Visa is doing and said, well, if it's good enough for him, it's good enough for me. And that was the wrong move. If I've got a separate session that I do, and I go through all the red flags of Steinhoff, and people had been saying since 2014, 15, all the red flags. I've got a list of, I don't know, 50 red flags where people said, be careful of Steinhoff, be careful. But they were what we call the lost voices. The majority are saying Steinhoff is great, so we go with the majority. But those lost voices were the voices of truth. Let's take KPMG. Why worry about ethics? Let's ask KPMG. This, by the way, comes from one of their own slide decks on their presentation on ethics. They're saying we messed up big time. When I used to work at Ernst & Young, we always looked up to KPMG because if there were any surprise audits, they would generally come out smelling like roses, and we didn't. But now we know why. And it's not just South Africa, KPMG. Remember, this culture spreads throughout the organization globally because the focus is on money, 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 not ethics. So we look at South Africa and state capture. We all experienced that firsthand, I think. Then we go to Australia, KPMG, cheating on ethics exams. Can you believe it? We go to America, bribing the inspectors from the Public Company Accountants Oversight Board to tell us, when are you coming to do your surprise audits so we can get everything ready so that we smell like roses? Carillion, second largest company in the UK, construction company, crashes. And the Ministers of Parliament had an inquiry. Now, you think many companies go insolvent. Why are they having an inquiry? Because all four of the big four were there. So we're not just picking on KPMG, but KPMG were the external auditors. They also dragged Deloitte across the coals because they were involved there. And the Minister of Parliament says to the KPMG partner, I wouldn't trust you to audit the contents of my fridge. That's how useless I think you are. Holland, same thing, cheating on exams. This is global. But there is light at the end of the tunnel. So this bribing, the Department of Justice did the investigation and they found that there was a whistleblower within KPMG, a partner blew the whistle. Wow. I'm impressed. So Diana Kunz was told the PCAOB will be here next week, Tuesday, to do a surprise audit. Oh, you're telling me they're going to be here next week, Tuesday, so it can't be a surprise audit, can it? So she felt uncomfortable about it. So she made a list. What can I do? I can keep quiet, which I don't want to do. I can go to the KPMG ethics hotline, which who gets that report? Who's going to action it? Who knows? She could have gone to the press. She could have gone to the PCAOB, but those are the ones that are potentially involved here, which was correct. They were being bribed. She could have gone to a lawyer. She could have gone to her mentor, but her mentor was a boss, and he's the one that told her that they're coming, so he's most probably involved as well. So she went to straight to head office, KPMG head office, to the most senior partner and said, this is what I think is happening. He said, thanks for telling me. And he started the investigation. He went to the Securities and Exchange Commission, who found that there was this bribing, and a few people have gone to jail, thankfully. She hasn't been fired. She's still at KPMG, and she's been promoted. That's why I say there's light at the end of the tunnel. KPMG published a survey, booklet, article after COVID to say that there's a triple threat. And these three things, it's fraud, cybersecurity, and ethics and compliance are the three biggest threats. They've increased in severity and are expected to increase and become more frequent, which is correct. We are seeing that. And most companies have limited defenses. A book that was published a while ago, Harvard Business School study, did a review of 207 large companies and looked at their growth over the long term, 11 years. And you'll find that the organizations that were built on values outlived those that are not built on values. in the long term, not in the short term. So you look at revenue growth, workforce growth, share value, net income. All of the organizations with values outperformed those where the values were lacking. So those green bars are the Enrons and Steinhoffs, who in the short term were outperforming everybody. But now we know why they were outperforming everybody. Another website you can go and visit to look at how ethics improves profitability is Ethisphere. They look at companies over a 5-year period and shows a very similar thing, that those companies that believe very much in ethics outperform those where the ethics is lacking. And every year they have competition of the most ethical companies in various categories: automotive, health and beauty, banking, financial, you name it. The root cause of fraud is a lack of ethics in the workplace. Quote from this Dr. Kavita and Sumareddy. The more fraud we find, the less ethics we see in the organization, and vice versa. It's a balancing act, ladies and gents. And what we find, and I'm going to show you now, is that the focus in most organizations is on the symptoms. Fraud is a symptom. They're not looking at the root cause. And that's why they are doomed to repeat over and over the same frauds, because they're not tackling the root cause. So if we look at COSO talks about risk assessments. And they say fraud risk assessments are considered distinct from general risk assessments because fraud risk is a separate principle. Absolutely true. I go to organizations and I say, have you had a fraud risk assessment? Yes. Can I see the report? It's not a fraud risk assessment. It's a risk assessment. They send me the PDF and I search for the words fraud, corruption, bribery, ethics. Hardly ever find it. Because enterprise risk is very wide, ladies and gents, and fraud is this one tiny part of this wide review. There's industrial action, adverse weather, fires, floods, currency fluctuations, all sorts of things that are looked at, and hence fraud tends to be forgotten about. So fraud risk assessment is distinct from a general risk assessment. Deloitte published a booklet on implementing a robust fraud risk management program with 10 frequently asked questions, one of which was about ethics. What is an ethical audit? Is it part of the financial audit? Because again, there's a misconception where the CEO, CFO think, my external auditors are coming to do the statutory audit. They're going to do the ethics risk assessment. No, financial audit is not an ethics risk assessment. It's distinct, standalone. So the difference between an ethics risk assessment and fraud risk assessment, they both look at risks, but the fraud risk assessment basically looks at controls. Where are they working? Where are they not working? Where could you have fraud? Whereas the ethics risk assessment looks at ethical violations that could affect the organization reputation. There could be fraud, there could be corruption. So very different. Now, when we're in an organization and we mention fraud risk assessment, people are going on holiday. They got sick leave. Boy, they disappear. 4-letter word, that fraud. But it's actually 5, but they treat it like 4-letter word. People are scared of that word fraud. That's why I say to auditors, when you're auditing, don't just go up to somebody and say, do you know of any fraud happening in this organization? You need to prep them. Hi, I'm the auditor, and part of my job is to prevent fraud, detect fraud, but actually manage fraud. So I have to ask a few questions about fraud and ethics. Is that okay? Then you start asking your questions. When we talk about an ethics risk assessment, people are, yes, sure, because we all think we're ethical. Well, 99% of us. The vast majority of people say, yes, I'm ethical. But we speak to their friends and family and colleagues, and they tell us a different story. But you know what it's like. We're biased as human beings. So when we do fraud risk assessment, two things get looked at. What is the impact? Low, medium, high? How much money could we lose? And what's the probability that this event will happen? And if it's high impact, high probability, we want to avoid that risk. So let's not go to Nigeria if we know we're going to be asked for bribes and we don't want to pay those bribes. Medium risk, which is high impact if it happens, but very low probability because we've got good controls and we do ethics risk assessments and so on. So we transfer that risk, maybe Fidelity Insurance. Then high probability, it's going to happen, but the impact's low. Someone will steal the petty cash. So we maybe change the process, maybe put in an extra control or tweak the control. And anything that's low impact, low probability, we assume that risk. So this is not rocket science, the fraud risk assessment. So basically, we're looking at impact and probability to give you a risk profile. Now, when we present these reports to management, I can assure you, ladies and gents, there's no excitement. It's because the fraud risk assessment is not to find fraud. So a lot of times people are disappointed because it's sold wrong. We're not there to find fraud. Data analytics is to find fraud. The fraud risk assessment is to look at where your controls broken, where they're not working, where could you have problems. So you take Retail Apparel Group. Those of you that are around about my age may remember them. They had a lot of retail stores in South Africa. And they went bankrupt. We did a fraud risk assessment. And we presented it to management to just say, oh, thank you very much, and put it on the side. They did nothing about it. I wasn't surprised when I think it was 2-3 years later, the company was insolvent. They did it for compliance. Tick the box, we've done the fraud risk assessment. But we're not going to change anything. It was one of the worst risk assessments I have ever seen. Everything was in the top right-hand corner. High impact, high probability. We knew it just a matter of time that company's going to collapse. And when we present to management, there's nothing motivating them. It's not as though you've lost 10 million, you've got to do something. When we tell people you've lost 10 million, then they want to pay. Okay, please investigate, prosecute, get our money back. Too late. Spend a little bit on prevention instead of a lot later on investigation. So the fraud risk assessment is to show that control. It's not working. There's lack of segregation of duties. That person does too much. And I can see, we analyze the body language. Oh, but I've had that person here for 20 years. I trust them. I'm not going to hire another person now to watch that person. I'm going to carry on trusting that person. Okay, well, fine. But we've told you. So we have to try and make it more urgent. And this is how we do it. We start with the ethics risk assessment, which naturally leads onto the fraud risk assessment, which we combine with data analytics. So what we do is this: the ethics risk assessment, best practices, do it once every 3 years. It sets the foundation. People now realize, oh, it wasn't too bad. It showed a lot of the good and bad in the organization. And it naturally leads into the fraud risk assessment, where people are no longer scared about this F word. They embrace the fraud risk assessment, but we're also doing data analytics in the background, analyzing actual data, master files, transaction files, to look for the anomalies. What we do, we present, like normal, the fraud risk assessment to management. Oh, yeah, okay. We'll get to it next year. No, you can't wait till next year. You need to do it. Why do I need to do it now? That's when we bring out the data analytics report. Say, because look at all the nonsense in your department. Potential conflicts of interest, duplicate payments, fraud, corruption, whatever we find. That now puts the pressure on. How are they going to sit there and say, no, I'm not going to do anything? This is not serious. If you do something, ladies and gents, let's do it properly. That's the message. Not half-hearted where we only do a fraud risk assessment. So, summary. The fraud risk assessment focuses on identifying areas where fraud could occur. Data analytics looks at the actual symptoms, indicators of fraudulent activity, while the ethics risk assessment dives into the root cause why we are seeing this. What's the attitude of people? I would say every company that we've looked at had internal controls on paper. Who's monitoring them? Who's evaluating them? It's not happening. Who's enforcing them? Everybody's on their best behavior when the auditors are here. When the auditors leave, but we can relax. We don't have to do all that nonsense that they think we're doing. So if the focus is just on internal controls, you're getting a false perception of the business. And while ignoring the root causes, which the ethics risk assessment will unearth, ladies and gents. So let's look at some ethics management frameworks. I know King 5 is out. I've got a whole separate presentation that includes King 5, but what I want to show you is that in public sector, it doesn't even comply with King 4, let alone King 5. Most public sector frameworks are silent about how ethics risks should be managed. Silent about institutionalization of ethics, and so on. If you look at the progression of King, ethics was nearly the last chapter of King 1, ironically. Then King 2 came along. It was promoted to the middle of the chapter, I've forgotten the word. The chapters, okay? It had, King 4 had 17 principles. There we go. Middle principle. Then King 3 came along. It's now the first principle. King 4, King 5, still the first chapter, first principle. Looking at ethical culture. So King 3 had 75 principles. King 4, 17 principles. King 5, 13 principles. Less is not always better, ladies and gents. And a lot of people contacted me, especially after King 3, to say, how do I implement this? So King 4 was great on how do we implement this. But now we've taken away so many principles, people don't know how to implement what the King 4 guidelines. And now again with the King 5 guidelines. They don't talk specifically about ethics risk assessments, but they talk about risk assessments. Okay, so now this is King 5 that we're looking at. That include the consideration of risks and opportunities arising from the economic, social, and environmental context within which the organization operates. They do say that what risk assessments are they talking about? Cybersecurity, ethics, fraud, vendor, market, mergers and acquisitions. There are a lot of risk assessments that you can do. But when we look at corporate governance, we're looking at fraud prevention, fraud detection, which is related to ethics. Public sector, Guide on Managing Ethics in the Public Service, compiled by the DPSA, has got this diagram in it. Now you look at the private sector booklet, Ethics Reporting Handbook. It's got exactly the same diagram. And that's what frustrates me when I'm speaking to public sector. Oh, no, we don't want to hear about King 4. We don't want to hear about King 5. And I'm saying, but your public sector guidelines are not doing it. So many people in the public sector don't even know this DPSA guide exists. And I'm saying that diagram that you're looking at is based on King 4. So whether you like it or not, you are implementing, if you are doing that, King 4. King 5 actually has got separate guides. How do you apply King 5 to municipalities, state-owned entities, retirement funds, medical? It's so easy to understand. So where King 5 or 4 talks about governing body, we will then talk about municipal council. Where it talks about management, we'll talk about administration. Now they can relate to that. We understand that language. And this booklet even unpacks it further. You'll notice links there where you can download those booklets if you're interested. if you're dealing with public sector. It's got the same diagram in it, same diagram that I use. So let's unpack it. People that are not familiar with this say, wow, it looks very detailed. It's not. It's 4 parts, simple, 4 parts. They're numbered, 1, 2, the top, 3 in the middle, 4 in the bottom. We've even color coded them. So let's look at blue, leadership commitment. How committed are the leaders to ethics? Do they even talk about ethics? Do they send out emails? Do they mention the word ethics in their year-end messages? In their welcome to the new employees, is the word ethics on the CEO's tongue? Does he or she talk about ethics? Does the CEO have town hall meetings where he or she talks about ethics? That's how you see leadership is committed to ethics. And of course, taking action, rewarding those that are caught doing something right and punishing those, consequence management for those that are caught doing the bad things that contravene the code of conduct. Then we look at governance structure. Who's responsible for this thing called ethics? Do we have a separate social and ethics committee? If not, who's looking after ethics? Is it risk? Is it the board? That's where the ethics champion should sit, ladies and gents. Don't get confused now. You've heard, like, for example, in the banks, they've got fraud champions. Those are junior people that would make sure people are attending the training, that the hotline posters are up and so on. The ethics champion is the senior person. In ethics terminology, you have ethics ambassadors that go and do the legwork. Okay, so going back to the governance structure, the board is ultimately responsible, and you need to have one person responsible so that they make sure everything is running smoothly, and they are the one that is reported to by the ethics department, chief ethics officer, which now we come down to number 3. Who's managing ethics? Day-to-day management. That's your ethics office. And if you don't have an ethics office, then who's managing this thing called ethics? Is it the risk office that's doing it? Compliance, because some companies have ethics and compliance. And you'll see that there are 5 parts to it. Ethics risk assessment. The ethics office should be doing the ethics risk assessments. Co-sourcing, outsourcing, doing it themselves if they know how to do it, once every 3 years. Looking at the risks and opportunities. Doing it qualitatively and quantitatively. Surveys, face-to-face interactions, analyzing documents. Out of that, the results will come the ethics strategy that drives the ethics management and governance within the business. What is our strategy? From that ethics risk assessment, you'll also get an ethics implementation plan. A strategy is not a plan. Very different things. So you'd have 2 documents, actually 3. If the ethics risk assessment is done, you have the report. Then you would have a strategy coming out of it based on the findings, plus the 3-year implementation plan. Codes and policies. Do you have a policy? You need an ethics policy, plus a strategy document and an implementation plan. Do you have a code of ethics? Do you have a code of conduct? Do you have a hybrid code of ethical conduct? They're different. They achieve different goals. The code of conduct is you must do it this way. If you don't, there's the punishment. Whereas the code of ethics says these are values. Let's live according to those values. Or you can combine the 2. Nothing wrong with doing that. Then we look at institutionalization. How are we making this happen? There are various methods to do this. Training and awareness. Whistleblowing. KPIs. How are we rewarding people? Does ethics even come into it? Or is it just about how much sales are being done? What about decision making? Who do I turn to? Is there an ombudsman? Where do I go if I've got a dilemma? Do I do this or do I do that? And then monitoring and reporting, where the ethics office monitors progression and then reports on a monthly or quarterly basis to the governance structure. Challenges, achievements, and so on. And then number 4 is independent assessment and external reporting. That would be your external audit, looking at your documents, corporate governance document, whatever it is that you are producing. Internal audit would assess the adequacy and effectiveness of this whole program. And they would both report up to the governance structure, generally once a year. All of that together impacts the organizational culture in a good way or bad way, depending how serious it's taken. The other thing we found, you've got the official culture of the business and the unofficial or informal culture of the business. Remember, a business is built on a foundation of various corporate cultures. Each department has its own unique culture, and that forms the foundation. And that's why it's so important to do the ethics risk assessment, to pick up where are the problem departments, where are the positive departments, what are they doing right that the others are not doing. And you'll see with informal, how do we find out what the informal culture is? It's, well, whatever is accepted. That's how we've always done it around here. Who are your heroes? Do you have any heroes or role models within the business? We ask that question. And often it's, yeah, the previous CEO was good. This one is useless. Okay, so now what are we going to do about that? Because this one doesn't think ethics is important. What are the myths and stories, legends? What language do we use? So that slide explains it a bit more in detail. So what are the norms and standards? We often hear that, well, that's the way things are done around here. Who are heroes? Like Brunt Pretorius, one of South Africa's ethical heroes. We're going to talk about him just now. What about the rituals? Do we celebrate when people do good things? Myths, stories, legends. What happened? There's a story where Walgreens, they're similar to our Dis-Chem. The vice president was sitting on a plane and found a notebook from their opposition. Could see it's the opposition. And he contacted the opposition to say, I found your book. I did not peek inside. And the opposition CEO said, we know you didn't. We trust you. You've got high ethics. And I gave them back their booklet. Imagine finding the CEO or vice president of your main competitor, his notebook, and all that information in it. What would you have done? The right thing, I hope. And what words do we use? Many times when I'm doing ethics risk assessments, I'm interviewing staff and I say, do you know the values? And those. What do you mean are those? Yeah, I know them, but nobody's living them. They're just these empty words on the wall. Okay. What is this thing called zero tolerance? So GAME used to be part of McCarthy. Those of you that know the story of Brunt Pretorius, he was the marketing director of Toyota South Africa. He realized it's a family-owned business. He's never going to become CEO. And he got the opportunity, Brian McCarthy offered it to him to come and take over bankrupt McCarthy Group. And he said, wow, that's a challenge. I'll take it. And he turned them around. Not by skullduggery, but by doing it ethically. And what happened, this is one of the myths or legends. One of the directors at Game Stores, he's based in Gauteng. He flew down to KZN and he was doing store inspections. And he was in the pavilion in Game Stores. And he remembered, oh, I left my shaving kit at home, whatever the case is. And he took some razor blades, stole, shoplifted. And they caught him on CCTV camera. Now, in many organizations, it would be, hey, just don't do it again. They fired him. Dan Barrett, the CEO, said, if I didn't do the right thing, Brunt Pretorius would have kicked my backside and I would have been in trouble. I had to do the right thing. And why was it so serious at that stage? Because a few weeks prior to that, one of the prestige cleaning staff were fired, dismissed on the spot for stealing some stationery. Now imagine, she gets fired, but this director who steals a packet of razor blades, which is most probably more valuable than the stationery, doesn't get fired. We can't have two sets of standards. Theft is theft, regardless of who the person is. We also, when we're doing our audits, ask about the cultural iceberg. So you've got the formal culture at the top and the informal at the bottom. And that's why we do the anonymous surveys and the face-to-face interactions, because each person is unique and we get different information by doing the qualitative and quantitative. Hence the ethical culture iceberg. The top is what they want us to see, but what's really going on underneath it all. So let me show you a story. 5 monkeys are placed in a cage. There's a ladder, and they put a banana on the top of the ladder. I think we can all work out what's going to happen. Monkey starts to climb up. Hey, food. When he climbs up, they spray ice cold water on the other monkeys. Not on the one climbing up, on the other monkeys. So they know now, if they're going to, every time a monkey goes up to get the banana, we're going to suffer. So every time a monkey goes up the ladders, the other beats him up because they don't want to get sprayed with ice cold water. That banana must stay there. Do not go up that ladder. Now they start replacing the monkeys. A new monkey gets put in. Now he doesn't know about you don't go up that ladder. So of course the other 4, they just sit there. This one, hey, food, and he goes up. They beat him up because they know if he goes up and gets that banana, they're going to get sprayed. So the second monkey, original monkey, was replaced, the third, the fourth, until you got 5 brand new monkeys in there. None of them received a cold shower. None of them go up that ladder to get that banana. So if monkeys could talk, you'd say, why aren't you going up to get the banana? I don't know. Same in the corporate environment. I ask people, why do you do it this way? It's always been done that way. Instead of challenging routine, many of us simply keep repeating what has been done before. Why? Because it's the easiest thing to do. Don't rock the boat. Ladies and gents, if you read that PwC report, the summary on Tongaat Hewlett and Steinhoff, both say the same thing. Culture of deference and lack of challenge. You were not allowed to say anything. That was the culture. Specifically at Steinhoff, one of the partners, audit partners, attended one of my sessions, and he sent me an email afterwards to say this is what was actually going on behind the scenes. He's no longer a partner there. And he said, when we audited, we would ask people, why are you doing it like this? MSS. What do you mean MSS? Marcus says so. That was the reason. You just do it. Do you want your job? Okay, guess I better do it. Another article tells us that the CEO was known as the seagull because he would swoop in, shit on everybody, and then fly out again. That only came to light afterwards, but there were many people that knew about it before the fraud was exposed, who could have said something but didn't. And I blame the auditors as well. They knew about it. But client brings in money, just like with David Duncan, the Anderson partner on Enron. He said, I knew things were bad. If I said anything, if I did anything, I would have lost a $50 million client. I would have been fired. So I said nothing. How do we audit culture? Well, first thing we do, have we inventoried acceptable and unacceptable behaviors? Does our code of conduct tell us you can do this, you can't do that? If no, let's inventory them. Make a list, do's and don'ts. If we do have a list, are the origins known? Like the banana and the ladder. If the origins are not known, let's find out, where did this come from? If they are known, is the basis still valid? If it's not, eliminate it. If it is, preserve it. Simple. You can also look at Maslow's hierarchy of needs. That's what drives people. Food, clothing, shelter. If I don't have food, clothing, and shelter, that's at the bottom. Physiological and safety. How do you want me to be at the top giving good customer service when I'm starving? So we need to look after the basics, and then people will start rising in that pyramid. So Richard Barrett took Maslow's hierarchy of needs and he just redesigned it. So now that little top piece, he's made into 3. And you'll notice the green is the transformation. At the bottom, it's all about me, self-consciousness. I'm thinking about me. I'm not interested in our customers, my colleagues, thinking about me. We need to get through that number 4. And then we do that where we look after the basic needs, and then we can start saying, okay, we're all thinking collectively, we have internal cohesion. We can now focus on making a difference in the world, not just looking out for myself. Have I got enough food for today? Being of service to other people. Ladies and gents, think about it. If we give good service, quality service, business automatically comes. We don't have to go doing unethical things to get business. Just make sure we're giving good product, good service. Let our yes be yes, let our no be no. And that just expands it. 7 levels of an ethical organization. Are we just pursuing profit and stability? Or are we looking out for social responsibility, sustainability, alignment? It's a progression. Now, I don't know if any of you experienced a Barrett survey. It's very expensive. It costs hundreds of thousands of rands, if not over $1 million. I experienced the Barrett service when I was at ENY. And basically, they give you a list of 100 words, good and bad words, and they ask you to choose the top 5 words or top 10 words that most closely reflect your current situation in the workplace, that currently reflect your home situation, and that currently that would reflect your ideal situation at work. And then they work out the problem departments and the culture and so on. I do something similar. I get similar results that doesn't cost over R1 million. I'll show you that just now. Audit board report. They said the biggest contributors to wrongdoing is organizational culture, and the biggest defense against keeping it from happening, organizational culture. That's how important it is. Yet they found most organizations are not making ethics and organizational culture a priority. And if they do some sort of ethics analysis, it's basically qualitative and not quantitative. Remember, qualitative is face-to-face. Now you're using insiders. Now you want me to tell an insider what I think of the CEO? I'm not going to do that. I'll tell an outsider. Remember the saying, a prophet is not without honor, except in his own hometown, in his own house, amongst his own family. We treat strangers differently to the people that we are working with. So you need to have qualitative plus quantitative, ideally done by a third party where people open up. So that framework is the framework that we suggest. It's best practice. It's used a lot in private sector. Now we come to public sector. And that's their mandate of the ethics committee. Now it looks different. I don't know why they have to go and change things. But anyway, if you unpack it, they're actually talking about exactly the same things. There's your ethics risk assessment. There's your strategy. Implementation, there's your codes and your institutionalization. And review and reporting is your monitoring and reporting. Exactly the same thing. But you'll notice they call it the ethics and anti-corruption risk assessment. They're trying to do too much. You can't focus when you're trying to do too much. You look at various government departments, anti-fraud, anti-corruption, ethics strategies, and you find this diagram. Now you look at that diagram and it says integrity management program, but it all talks about fraud and corruption. They hardly mention ethics. When you unpack that middle part, it's all about prevention of fraud and corruption, detection, investigation, resolution. No wonder our ethics is forgotten about. They're trying to do too much. The DPSA actually says these ethics responsibilities have often been treated as add-on allocations to employees who already have full-time roles within their departments. So they're going to give it a lick and a promise. So the ethics risk assessment. What happens? How do we do it? We start off by understanding what is ethics. It is doing what is good, right, and fair for ourselves and others. It must be win-win. Now, ethics risks undermine the good aspect and disturbs the balance between ourselves and others. Because if I'm ripping someone off, that person's not happy with me. And they're going to go and holla Peter and tell their friends and family. It's this knock-on domino effect. So we're going to look at the why, what, when, where, who, and how. The 5 whiskeys in a hotel and related to ethics risk assessments. Why should we do it? Well, King 5, for starters, which emphasizes the importance of fostering an ethical culture and managing ethics. We can't leave it and it'll manage itself. We've got to actively be looking. What is our culture like? Is it positive? Is it negative? Do we want to change it? Do we want to keep it as it is? When should we do it? ERA should be done once every 3 years. That gives you enough time to fix what is wrong, start changing what is right, and then you do the ethics risk assessment again 3 years later. If you leave it longer, people start forgetting about it. And I'm going to show you the things organizations do wrong towards the end of the session. But you continually monitor. You don't just do it once off and you sit back. That's where the implementation plan comes in. It's a 3-year implementation plan. Who's going to do what in the first year? Who does what in the second year? And you keep on updating it, moving things around. Okay, this is now more important. Let's pull that in from year 3 into year 2, whatever. Where should it be performed? You can do physical walkthroughs, online, easy nowadays with Zoom to speak to people, Teams, combination, physical, online. I like the physical because you pick up the vibes when you walk in businesses. You pick up the terminology and how people are talking. You can see posters, screensavers. You can see what's actually happening in the business. I prefer that. Who should perform it? As I mentioned earlier, ideally an outside party. If I'm going to have the risk manager or somebody senior coming and questioning me, am I going to be truthful? Most people will not. They say to me, I'm telling you this because you've told me it's confidential and I want to see change. But if anybody else, I would not say anything. I'd just get on with it. There's your prophet is not without honor, except in his own hometown and his own family. Ethics risk assessment is not a forensic investigation. It's not a witch hunt. It's not an ethics audit. Internal audit should not be doing the ethics risk assessment because then they're auditing their own work. It's not a culture survey. It's not a maturity assessment. But we can bring the culture survey into the ethics risk assessment, and we can bring the maturity assessment in, which I often do, to make it comprehensive, but it's definitely not a witch hunt, forensic investigation. So it needs to be communicated correctly to people. So I was doing an ethics risk assessment and people weren't cooperating. So for example, I'd say, how often does the risk committee meet? Once a quarter. Okay. Do you take minutes? Yes. Can you send me the minutes? I get an email. Ah, there are the minutes. One page, cover. Where's the rest? No, I'm not allowed to send you the rest. Now remember, I'm an outsider. They don't want to send it to me. So I've got to go back to my sponsor to say they're not cooperating. So that's the email my sponsor said. Good day, Mario and colleagues. Colleagues, you're urged to comply by submitting the requested information. This is not an audit, nothing to hide, as they're assisting us in improving our systems. Then I was sent the whole report, minutes, everything that I wanted. So that's what I'm saying. If people are scared about ethics risk assessments, imagine how uncooperative they'll be when it's a fraud risk assessment or corruption risk assessment. What are we going to measure? I just want to share this booklet. Yeah, I'm going to break just now, then I'll find the booklet. It's not allowing me to access my own computer. So in this booklet, it looks at 6 items. It looks at the ethics culture or work climate, whether there's an ethics officer, compliance officer. Is there ethics awareness and training? Are there ethics reporting mechanisms? Sanctions for ethical violations, rewards for ethical adherence? How do we recruit people? Are we trying to find people of high integrity? What about ethics codes, ethics policies? And then goals and metrics. How are we measuring everything? So this booklet has got 6 of those items. It does not have numbers 5 and 6, but they do discuss sanctions and rewards. So when I do my maturity assessment and the ethics risk assessment, I've just added a section for sanctions, rewards, and recruitment. So if you want to do an ethics risk assessment, this is what I suggest you do. Those are the 7 items you measure. The goals and metrics you don't really measure. It's just a question of how are you measuring everything? Are you measuring your culture? Are you achieving your goals? Ladies and gents, we've been going an hour. Let's take a 5-minute break. Stretch your legs, toilet break, and I'll find that document. So back in 5 minutes.
Okay, everyone, I'm sure you can hear me. We'll start again at 5 past. It'll give us just 5 past 2. We'll start again. Thank you.
Perfect. Stan, I shared that document. I don't know if everybody has received it or it just went to you. It just says to hosts and panelists.
Sorry, Mario, could you repeat that? I was just out of earshot.
I shared the document, but I don't know if it went to all the attendees. When I shared it, it just said it went to the panelists, which I take it as you, me, and Danny.
Possible. Danny, can you? Yeah, Daniel sorted out. He's got control
Okay.
there.
Great. Thank you.
Okay, whenever you're ready, we can start, and I think Danny will
Okay.
be back in a sec.
Cool. So if you download that booklet, you will see they explain it very nicely.
Sorry, Mario, just to
Yes.
stop you. You sent it just to us, to the hosts. Can you just change your setting to say where you're saying just in that blue highlight, just choose to everyone? Because it's not letting me download.
Doesn't give me an option. It just says host and panelist, Danny or Stan.
Okay, I want to try. Okay, I'll try. Keep trying to save it and then resend it.
Okay. Zoom's full of surprises.
Yeah.
Thanks, Danny. Yeah, so this document gives you a starting point because people will say to you, why are you measuring those? What's significant? Well, Global Institute of Internal Auditors suggests those are the items we should be looking at. People also ask me, so what does the ethics risk assessment cost? So brace yourselves. You're looking 2 million upwards. You know the consulting business, ladies and gents. Hire junior analysts, bill clients premium rates, target 75% utilization. Hence, you end up with this 2 to 3 million rand cost. Most of these ethics risk assessments do not include a culture assessment or maturity assessment. As I'm saying, the one I do does. And you're looking, and now it's specialist firms. So these are people that used to work for big four type firms, and they've broken away and they've got boutique firms. And you're looking at half price, about 1.2 million. The very small firms like myself charge about 400K. That's the difference. And you don't have juniors doing the work. So what I'm saying is you could look at this as an extra revenue stream. So at the moment, what are you doing? Bookkeeping, tax. What about adding ethics risk assessments? You see what the big four are charging for them. You could come in way below that. And they're called different things. I call it an ethics risk assessment, but I've seen the same things called integrity risk assessments, ethics maturity assessment. It can be standalone, compliance risk assessments, ethical culture maturity assessment, and so on. At the end of the day, it's the same thing. And also do your due diligence. Groundup has published a few articles about our lottery and that the lottery hired this ethics company and they spent 28 million rand with this ethics company. 28 million, ladies and gents. It would take me many, many, many years to earn 28 million. They did it in 1 year with one client, of which they did an ethics risk assessment and charged nearly 600,000 rand for it. And the investigator says there is no report. We can't find it. Did they even do the ethics risk assessment? So they're trying to get their money back from this company. So all I'm saying is do your due diligence before teaming up with somebody. 28 million for ethics interventions. How do you measure the ethical environment? Try and team up with someone that's qualified. I believe in train the trainer, co-sourcing. Why do you have to keep on hiring consultants to do the work where you could do a co-source, where you have a transfer of skills, and eventually you do it yourself. You don't need to hire a separate person. I know some of the accounting firms don't like that because they want you to keep on calling them in. It depends what your model is. Use reliable assessment tools, questionnaires, interviews. Absence of intervening factors. You're going to have pushback. You have to overcome that. Willingness of the patient. The organization must want this. Hopefully it's not a tick compliance exercise. And then benchmarking standards. What are we going to compare it to? So the ethics risk assessment comprises 5 parts. Number 1, we have a kickoff meeting. Who's the client liaison? Just remember, maybe I didn't tell you this. It's about a 3-month project. So you do it once every 3 years, but it's a 3-month project. You have your kickoff meeting. You request documents. We then create the survey, send out the survey, start conducting our interviews. So we wait till the survey responses have come in. Then we conduct our interviews. No good doing the interviews before the survey responses have come in. We start assessing the program against best practice. We evaluate the risks, the opportunities, start putting our draft report together. That's number 3. Number 4 is the ethics maturity assessments. We have meetings, one-on-one meetings with risk officer, internal auditor, procurement manager, SCM manager, HR manager, asking questions relating to that PDF booklet that I just sent out. They must answer those questions. You will see there that there are 5 columns, and they must say, yes, that applies to us, that doesn't, and then you work out the maturity level. Then number 5, once we've completed the report, we create an ethics strategy and a 3-year implementation plan. So if you plot it, this is what it looks like. So basically, the first month is we want these documents. We create the survey, get approval of the survey, send it out, and then we wait. We wait for the documents to come in. We wait for the survey responses to come in. By that time, it's 1 month gone. Then month 2, the heavy work starts. We start interviewing people, finding out that there are other documents. Hey, you didn't tell us about this document. You didn't tell us you had an ethics risk assessment done 5 years ago. Where is that report? You find it out as you start speaking to people. That takes care of month 2. Month 3 then is starting to wrap up, compiling the strategy document, the 3-year implementation plan, and starting to give feedback to the client, presenting to the board, exco, whoever. This is our project plan document. So, okay, ethics risk identification. Prepare the ethics survey, who the responsible people, what is the timeline. There are many survey platforms available. Survey Planet has got unlimited responses. I currently use what's called free online surveys. They allow up to 1,000 responses, which takes care of most small companies. If it so happens that I'm doing an ethics risk assessment for a company with more than 1,000 employees, I will then pay for that. I would subscribe to free online surveys, which I have done in the past. You subscribe month by month. Okay, so I need it for this month. I subscribe, then I cancel the subscription. Well, I may just keep it going, depends. Something like SurveyMonkey, it allows you, I think, 200 responses or 500. I can't remember. It's too small. Most companies that I'm dealing with are over 300-400 employees. So that's why I say rather look at free online surveys. or Survey Planet, which doesn't have a cap, but I don't know how good a survey platform it is. Now we come to the survey, excuse me, questions. Those are the 7 areas we ask our questions. So it's not 7 questions. We have no more than 30 questions. So under ethics culture, we may have 5 questions. Under reporting, we may have 3 questions. It just depends. Depends on the organization. There are no demographics because it's supposed to be anonymous. People are worried. They don't want to be victimized. They don't want to be fired for telling the truth. And they ask me, how anonymous is anonymous? And that's why I say to them, your survey responses come directly to me. I then sanitize the report. I don't name names because sometimes the person names what department they're in. So there's no demographics. Are you male, female? What is your age? How long have you worked there? What department? None of that. None of that. It's just here are the questions. Answer the questions, submit them, and then I evaluate the answers. So I mentioned earlier the Barrett survey, the R1 million survey. What I do, I create my own list of good and bad words. And I don't have it too long. I don't have 100. 100's too much. 24. And I say to them, choose the one word that best summarizes how you feel today about your employer. And they'll choose one of those words, and you'll see some of them are good words. Like number 15 is good. 17, innovative. Some are bad, like number 16, incompetence. 13, exploitation. 4, boring, backstabbing. It works, ladies and gents. It's simple, and your client saves R1 million. Give you an idea. When I used to work at E&Y, I was there 6 years. First 2 years were very good. I thoroughly enjoyed that. We had a very good partner, and then he decided to go to Canada, and it went downhill from there. You know, it's all about people. And I remember saying to my one colleague, hi, how are you doing? And she said, you know, I woke up this morning and I jumped out of bed, and she had a smile on her face. And she said, I thought it was Saturday, but I realized it's Friday, and her face changed and I wanted to vomit. So if I had vomit on that list, that's the word she would have chosen. I left just after that. That department wasn't a very good department. And that's why we're going to talk about leadership skills. You can see whether your boss cares about you or not just by words, but by their actions. And just by asking these type of questions, you can pick up very quickly where are the problem departments, because 9 times out of 10, it relates back to the boss of that department, he or she. How are they treating their people? Just while we're on the topic, so Mike Savage was the partner when I was there the first 2 years. There was no favoritism with Mike. He wasn't worried about sales. He would come and distribute his sales. He would come and sit with somebody and say, I see your sales aren't so good this month. How can I help you? Can I make a few phone calls? Can I open a few doors? Wow, Mike, you care about me. Or he'd come and say, here, take this. I just got a sale. Those of you that have worked in that environment will know that there's a lot of pressure. They call it the balanced scorecard. You've got to bill your client by doing work. You've got to do proposals. You've got to bring in sales. You've got to manage your team if you're a manager or director or partner. So unheard of that people give away their sales. But he would give them away. And I said to Mike, why are you giving away your sales? I see the other partners, they guard them, boy, they're like gold. And he said, if all the people in my department are doing well, how can they say anything to me? I'm responsible for those people. They make me look good or not. I said, yeah, you got a point there. So his sales were never on target because he would give them to us. We were all looking good. And he said, as long as you're looking good, they can't touch me. And he was a very good partner, brought in a lot of work. If We were celebrating something. The whole department went out. There, at that stage, there were about 40, 50 of us in the department. All 50, we would go out. Gauteng, I'm talking about. You know, we had a few forensic people in Durban and Cape Town. And we would celebrate pizzas, lunch, dinner, whatever the case may be. Once Mike left and the new partners took over, it was their little cliques. They would go out to lunch. They would go out to dinner. They would celebrate. The rest of us, chopped liver. No wonder why. Colleague is saying vomit. But anyway, this is what the ethics risk assessment would unearth, ladies and gents. That's the point of doing the ethics risk assessment. Okay, so that was question 1. I'm just giving you examples. I'm jumping now to question 7. I ask these questions. I have read and understand the ethics policy. Strongly agree, agree. Neither agree, disagree, disagree, strongly agree. They must now choose. These are key questions. Very important how you word your questions, ladies and gentlemen. You don't want ambiguity, because then people are going to say, okay, the question talks about staff and managers. How's he answering? Is he answering for the staff or for management? No ambiguity. So I have read and understand the ethics policy. Most people, of course, yes. So you've got like 90%. Yes, I've read it, I understand it. Now, 2 or 3 questions later, we are asking, are staff members allowed to have other remunerated jobs? Are staff members allowed to do business deals with friends and family? Are staff members allowed to accept gifts from customers, vendors? And now you see the answers coming in. Yes, no, I don't know. It depends. Hang on, but 90% of you said you've read and understand the ethics policy. You obviously have not read it or do not understand it. That's how we come up with our findings. We don't just ask, have you read it and understand it? Because we know people are going to say yes. We want accurate. So we test the people. We ask questions based on their code of ethics to prove that you do not understand it. We don't know who you are, but we know now that 70% have not read it or do not understand it. We also like to use a 4-point Likert scale for most questions. Everybody's got an opinion, ladies and gents. We want that opinion. We don't have that I don't know, because that's not telling us anything. I've got the I don't know here because, oh, wow, you don't know if a person's allowed to have a remunerated job, but you've read the ethics policy. So there it fits perfectly. But for the rest, I want an opinion. And people like more than 2, yes or no. So we give a satisfied, very satisfied, dissatisfied, very dissatisfied. So they feel like, okay, I can choose. I'm not very, very dissatisfied. I'm just dissatisfied. They feel comfortable. We are getting information. So that's why I'm saying, once you've done this once, if you co-source with somebody, you learn how to do all of this, you do it yourself after that. Now we move to number 2. Obtain the policies and documents. So we've made a list. These are the standard policies that we would want. Your code of ethics and or business conduct, ethics policy, private work policy, because sometimes it doesn't appear in the code of ethics about, can I deal with friends and family? Can I accept gifts? You've got a separate gift policy, conflict of interest policy, and so on. So they must either say, yeah, we have this, we don't have it. Have I received it? Yes or no? Is there a procurement policy, fraud prevention strategy, and so on? And then as we are interviewing people, they are telling us about these other policies. Hang on, that doesn't appear on our list. Okay, I need to add it on my list because that's relevant to what we're doing. Then we start conducting interviews with selected individuals. We interview, ladies and gents, on average, 40 to 50 people in each company. The interviews are short and sweet. I book an hour. If it's a senior person, maybe 30 minutes. They don't want to sit there for an hour. So you've got to choose your questions carefully. But generally, we are finished within 40 minutes. Those are some of the questions. Depends on who I'm interviewing. I won't ask all of those questions. I will choose maybe 5 of those questions. If it's a senior person, maybe in junior, what are you hoping to see from this ethics risk assessment? What is your organization's ethical reputation? What's your opinion of the ethics and compliance department? What is your opinion of the code of ethics, of the values of the company? What is your opinion on leadership commitment to ethics? Is ethics discussed at management meetings? Is it a standing item at board meetings? And people will say things to us like, the only time we hear about ethics is when we have an ethics incident. Otherwise, we never hear about ethics. Oh, that's interesting. Okay, thank you. Are there any ethical role models? They love that. They love telling us, yes. Most people, ladies and gents, their ethical role models is their mom or dad or grandfather. It doesn't, but sometimes it's people in the organization. Okay, after the interviews, we assess ethics management program against legislative prescripts, best practices, in order to identify any risks, gaps, and opportunities. So, for example, obviously, we're going to look at King 5. What does King 5 say? If we're in Namibia, we'll compare it to the NAM code. If we're in Lesotho, we'll compare it to the Mashlomi code. If we're in Botswana, we'll compare it to the Pula code. Wherever you are, you just adapt. And of course, all the other legislation that goes along with it, depending what country you're in. Okay, now we're on number 3, analysis of risk and control. Once the ethics risk identification process has been done, we assess and evaluate the risks and opportunities. This is how we do it. When 75% or more of respondents provide a positive response, it's regarded as significant. Under 75% is not significant. However, when it comes to a negative response, when 10 or more % provide a negative response, it's regarded as significant. When it comes to negativity, it spreads like wildfire, ladies and gents. That's why we do that. You might think, only 11% of the people are unhappy. Only 15% of our people are seeing corruption and conflicts of it. Only 15% are seeing corruption. You've got a problem. So that works fine. 75% or more positive response, significant. 10% or more provide negative, significant. And you explain that in the report. We ask for comments. What I didn't mention is I used to have at the end of the survey a place for comments. So yeah, answer all the questions and then make your comment. And only when I'm interviewing people, I realized that they actually had a lot more that they wanted to say when doing the survey. But by the time they got to the end of the survey, they'd forgotten about it. So now, after each question, I've got a comment section. Do you want to make a comment? Do you want to explain your choice? And the people are explaining. I don't now have to wait now till the end. Works much better. So have that comment section after each relevant comment. They can either use it or not use it. You don't force an answer there, because that's a survey. You force them to answer the yes or no, very satisfied. But for the comment, it's not a force. You don't have to make a comment, but you can see they want to make comments. And of course, we sanitize. We've had some people saying terrible things about managers and directors and CEOs. You don't want that circulating. So I leave it as is for my sponsor, the risk manager, whoever hires me. I show them, look, this is what people have said. Please do not send that report out. I'm going to sanitize it if you're happy with that, and then we can send it out. And based on those comments, I don't just list hundreds of comments, because you're going to get hundreds of comments. I put them in categories, that these comments relate to people issues. These comments relate to process issues. These comments relate to technological issues. And of course, you can imagine most of the comments relate to people. Based on the survey outcomes, the document review, we're going to start pre-populating the report. So basically, that's the report. We start with an introduction, overview of the methodology, executive summary, and then detailed results relating to those areas in that booklet. The questions we asked and the responses we got asked, and our observations. When I was walking in this department, this is what I saw. And I photograph things to put in the report if I see things that are significant. Compliance office, awareness and training, reporting, sanctions, recruitment, and then a conclusion. And then I've got 3 appendices. The respondent comments, outcomes of our management consultations, because I have management consultations. I will just say procurement, I met with people. Risk, I met with people. HR, I met with people. No names. And then the ethics maturity matrix. And I have a separate report that evaluates the code of ethics. I compare it to best practice, the code of conduct, code of ethics. There's a whole lot of criteria that we look at. Now, number 4, ethics maturity assessment. That's what you're going to see in that booklet. So the booklet, remember, talks about 6 items. We focus on an extra 2. Recruitment and consequence management and rewards. So what you are seeing there, this is an actual assessment from one of our clients. I've highlighted what they have chosen. These are Zoom meetings, and I'm speaking to them, or face-to-face meetings, and I'm saying, let's have a look at those 5 columns. Okay, so immature, repeatable, defined, mature, world-class, relating to those 8 areas. And you'll see there that number 1, which is culture, some are in defined, which is in the middle, some are in the column to the left, some are in the column to the right. So we come up with an average score. Very few do you get them all sitting in the same column, which is number 5. They're all sitting in the same column. And number 7, it just so happens they're all sitting. So it's easy to score those. For the others, you have to come up with an average. And then I put that all together into the matrix to say, this is your current maturity, which is the gray triangles. And often I have clients that are immature or repeatable. And then I say, well, your target should not be world class. It's going to take you a long time to go from immature to world class. Just move up 1. So if you're at the moment, if you're in defined, your target should be mature. And remember, ladies and gents, not everybody needs to be world class. If you are South African breweries, you need to be world class. But if you're not, if you're a small company, if you maybe a municipality, you don't need to be world class. We would like it if our municipalities are world class, but from their perspective, they don't need to be world class. So we say, focus then on mature. That can be your ultimate. Then we go to phase 5. Compile a strategy based on the outcomes, the document reviews, management interviews. The strategy document can be, I've seen some that are like 7 or 8 pages. It doesn't say much. The whole idea is the strategy document must explain everything. Your strategy document can be lengthy. So the strategy document that we create is in the region of 30, 40 pages. The report that I do is about 130, 140 pages. Because I like putting pictures, big text. I've seen some reports you need a magnifying glass to read them because they're trying to cram so much on a page. It just becomes confusing. You know, that's my style. Maybe you agree with it, maybe you don't. Okay, so the ethics strategy document discusses what was found in the ethics risk assessment, which looked at everything. The ethics risk assessment looks at leadership commitment, governance structure, monitoring and reporting, institutionalization, code and policies. And when last did you have an independent assessment? Out of that comes the ethics strategy and the ethics management implementation plan, your working documents. That is what the ethics management strategy index will look like. Table of contents. I would start with a glossary of terms so people understand what we're talking about, which will be unique for each client. The background, why were we hired to do this? What was the objective of the strategy? The scope, what's the legislative framework? What are principles of ethics management? And then all the yellow is what we have found doing the ethics risk assessment in terms of leadership commitment. Is it low? Is it medium? Is it high? Give examples. That's why I bring in Brunt Pretorius as examples, and I'm going to show you some of them now. And you will see that I've got an example, Northwest Province, ethics management strategy and plan. They're trying to do too much. Now you've got your implementation plan with your management strategy. No. Two separate documents. And I've seen one where it's the policy, strategy, and plan all wrapped up in one. Yes, we don't want too many policies and plans and documents, but in this case, they need to be separate. So I've just copied and pasted the wording. That's leadership commitment. So I explain. What is leadership commitment? It starts with members of the board and EXCO. They need to be the role models who are walking the talk, setting the tone. And I stress that because if they are not doing what they're supposed to do, your whole program is going to fall flat. I remember one staff member saying to me, our executives have got foot and mouth disease. I said, what are you talking about? Well, our executives are telling us with their mouths to do the right thing, but we watch them and they're doing the wrong thing, hence foot and mouth. Not good. Board members must take more leadership role in promoting ethical behavior. The leadership of the company has demonstrated their commitment by providing the requisite budgetary and human resources to support the ethics risk assessment and strategy. So why would you stop there? That's my point of putting that in there. You've gone so far. You've committed yourself. You've paid a lot of money. Do the extra bit. Make it work. And the ethics office or officer will assist the company's leadership to demonstrate their seriousness and make suggestions and talk about town hall and write speeches for you. Whatever they have to do, they will do it for you. That's why we say communications will be driven through emails, town hall messages, induction messages, whatever the case may be, videos. Some organizations take ethics seriously. One of them is Tata. So a lot of people, when they think of Tata, I say to them, what is Tata? It's that funny little motor car. Okay, yes, they do make that funny little motor car, but they also make Land Rovers. They also make Jaguars. They also do financial management. They also do industrial products. They are a global organization worth billions. People don't know that. And Ratan Tata, who was the CEO, he passed away, I think, last year. Very big on ethics. And he actually explained in one interview that he was trying to expand Tata, and he went to America and met with executives there to try and see if he could get into the market. And they basically said to him, if you give us something, we will open the doors for you. And he said, I don't pay bribes. That's why Tata is not that big in America. And Tata celebrates once a year ethics. Now, when I speak to many organizations, they say, yeah, we do too. We've got an ethics day. I say, well, that's great. Tata's got an ethics month. And they look at me like, a month? Yes, a month. So every July, they celebrate Ratan Tata's birthday. And even while he was alive, they celebrated his birthday, July month, with ethics initiatives. So I want to give you an idea of the type of things that they would do.
Mario,
note
before
the
you go
sli-
on,
Yes.
did you see the question or the at least comment by Cheryl in the
No.
Q&A?
Oh, I see. Open. Okay. We have to pay a master runner to expedite paperwork out of the master's office. Without such a runner, we wait for documents forever. It's now a function of being able to do one's job and deliver. Yeah. Cheryl, when we open cases at the police office, police station, some of the police officers have hinted, well, you know, if you don't give me something, do you have a job for me? Then I can make this go quicker. That's what we're dealing with. I was just chatting to Danny and Stan before, and the world's not getting better. It's getting worse. It is very difficult for ethical people to survive in this world. Because everything is, well, you scratch my back, I'll scratch your back. You'll notice Tata Steel dismisses 35 staff members for unacceptable practices. Ethics is a priority. I wish more organizations were doing that. And what I found is that the organizations that are taking action don't want anybody to know. And I'm saying, use it to your advantage. Show people that you're serious and that if you want to come and work here and you want to misbehave, we are going to find you. We're going to take action. If I was your customer, it would give me confidence that, hey, you're actually taking action, because I know the scallums are everywhere. No one can sit here and say, we have the honest people in our organization. No, we don't. We've all got the scallums. The sooner we find them and get rid of them, the better. Take action. Tell people. Even within the organizations, people say to me, we don't know what happened to that person. 1 minute they were here, next minute they were gone. It's all hush hush, swept under the carpet. Make it positive. You'll notice the slogan for Tata: ethics begins with me. It's very easy for us to sit here and point fingers at other people. What are they seeing when they're looking at us? Ethics begins with me. And you'll notice that that was just Tata Chemicals. I think they have 10 divisions. Tourism, motor cars, you name it. That's just chemicals. Each one does their own thing every July. And it's not only July, they also do other things during the year, but the focus is July, that whole month of July. And they come up with every year different slogans, different initiatives. Otherwise, people are going to get bored and it's, we did that last year. So Brunt Pretorius, ranked as one of the top 5 high integrity business leaders in South Africa. Yeah, SARS, they're everywhere, Cheryl. Because they know there's no service delivery. So I can make money now if I do what I'm supposed to do. That's bribery. It's corruption. In 2009, he was recognized as the most trusted leader in the South African motor industry. That's one of the reasons why Toyota is the biggest brand and has the market share. People trust Toyotas. They're not faultless. I've got a Toyota. I do not take my Toyota to Toyota dealers because I'm starting to lose confidence in them because it's become a money thing now as well. And I take my vehicle, but it's on 280,000 kilometers. A friend of mine just sold his Fortuna. He had a diesel, 490,000 kilometers. It's still going, but it's now starting to give him problems. And he said, okay, now it's time to trade it in. He traded it in, got a good price for it. That's the ethos at Toyota. We're going to build the best product, not build a product that's going to last only, well, your warranty is 2 years, so it's going to give up the ghost, just after that, because we don't want to pay for it. And he says, high integrity leaders possess moral intelligence. What's moral intelligence? He says 3 things. They put values over profit. Values over profit. Sure. Wherever we look nowadays, it's profit first. Values, no. Do they even feature? Service over power. What does he mean by that? The more senior we are, the more we need to be of service to others because we have more power. And that was the Mike Savage I was telling you about at Ernst & Young. He said, I asked him, why are you doing this? He said, because I've worked on the JSC. I know a lot of people. I'm the boss of the department and I have power to open doors and I have contacts. So if I can help you, I want to help you. Wow, thanks, Mike. He calls it servant leadership. As opposed to many bosses who sit back, you must now make me look good. I'm the boss. I must get all the glory and you must do all the hard work and don't expect any help from me. Service over power. He realized that if his people are doing good, he automatically looks good because he's the boss. And then long-term over short-term. Again, Brunt Pretorius was joking and he said, when I was at McCarthy, we used to joke that long-term is, what are we having tomorrow for lunch? The Japanese are thinking 5-year plan, 10-year plan. That's why you see nowadays CEOs are committing all this fraud. And when the ship goes down, they just step off the ship onto another ship with their golden handshake. And that ship goes down with the low echelons of employees who need their jobs, who are now losing their jobs and even their pension funds, like at Enron. It wasn't just a job they lost their pension fund because the pension fund was linked to the Enron share scheme. Many of these executives are only thinking short term. This year's bonus, this quarter, this year. They're not worried about next year and the next 5 years. I attended a conference many years ago and Brunt Pretorius was a guest speaker before COVID. I think he was still working at McCarthy. And person at the conference said to him, you know, it's futile to try and fight fraud. It's pervasive. It's getting worse. I'm talking now 20 years ago, ladies and gents. Can you imagine what that person would be saying now? And he says, we're fighting a losing battle. You know, that was the Q&A session. So Brunt had finished his 40-minute presentation, and he said, you better to light the candle than curse the darkness. Each of us can make a difference. Instead of sitting back and just saying, oh, there's nothing we can do. Let us be the catalyst for change. Let us be that pebble that gets dropped in the pond. Those ripples have a far-reaching effect. If each of us did our little bit, collectively, it would make a lot. That's the message, and it still stands today, ladies and gents. It's tempting that we want to give up. Then we look at governance structure. Who's in charge of ethics? And again, I've just copied and pasted this from the standard strategy document that I do. I tweak it for each client. So what we're saying is the day-to-day management of ethics and the implementation cannot be confined to the ethics office. It's imperative that all stakeholders take some sort of responsibility. And I'm going to show you when we get to it that the implementation plan is not for the ethics office to implement. We will put on there, HR, you are responsible for this. And we get agreement with them. It's not telling them you must do this. Can you do it? Are you prepared to do it? Yes, okay, great. Can you do it by this date? Great. That's on the implementation plan. Compliance, investigations, forensics, whoever. The Ethics and Compliance Office is an independent division of whatever department mandated by the board, blah, blah, blah. And what is our motto, mission, vision, and so on? What does the Ethics Office officer do? There's an organogram, who reports to who. So yeah, again, as an example, you'll have the board, you'll have the audit and risk committees, the social and ethics committees. Underneath that, you'll have operations, ethics office, ambassadors, ethics committee, internal audit department, risk management, and then the support structures. All of this goes in the strategy document. It's a reference manual. People refer to it. I also put this in the strategy document, ethical leadership failures, because it falls or rises on leadership, ladies and gents. And we explain some of these blind spots to say, why, if it's not working, look at this. Could it be ethical blindness where the leaders are failing to recognize certain issues as ethical because it's just, let's make money. If it makes us money, it must be right. As Barry Minko was quoted as saying, right is forward motion. I'm making money. And anything that gets in my way is wrong. And he went to jail 3 times. He's quite a character. If you want to look him up, Barry Minko, M-I-N-K-O-W. I've spoken about him before in sessions. He became a multi-millionaire at the age of 20, had a Ferrari, bought his girlfriend a Porsche. Ethical muteness. We don't talk about ethics. Often I'm told, as I mentioned earlier, the only time we mention the word ethics is when something goes wrong and there's an article in the newspaper that's bad about our organization. Ethical incoherence, inconsistencies among values. Often we get that where the rainmaker can misbehave and do all sorts of things, but he's the rainmaker, so he gets left alone. Anybody else that does anything bad will get punished, but the rainmaker, he's okay. Ethical paralysis. We don't do anything about it. We know something's bad. Nobody says a word because of lack of psychological safety. Ethical hypocrisy. Spouse values that are not committed to the organizational values. Ethical schizophrenia. We act differently each day, depending on what mood we're in. Ethical complacency. I'm the CEO. How can I be unethical? I'm in forensics. How can I be unethical? Ladies and gents, when I was at E&Y, 2 of my colleagues were dismissed. So we used to do work for the asset forfeiture unit. So I remember the Billy Rotenbach one. So Billy Rotenbach was the CEO of Hyundai South Africa. And he committed a fraud and ran away. He's never come back to South Africa. I think he lives in Zambia, Zimbabwe, somewhere around there. And the asset forfeiture unit asked us to go and seize the assets from his home. And his wife was at home. He hadn't left with her at that stage. And we took the Ferrari. There were parrots. Each parrot was allegedly worth 40,000 Rand, jewelry, you name it. And one of my colleagues drove the Ferrari back to the office. I think he was very happy. Brought back a whole lot of his assets, and we had a room. Now, being E&Y, we tell clients how to manage risk. At that stage, the room that we had 1 lock and 1 key. But we're telling our clients, no, you can't have that. You must have 2 locks with 2 keys. How about 2 separate people to force collusion? We had 1. It's needless to say, someone saw that as an opportunity. And the jewelry went missing. Sorry, let me just close the door. Sorry about that. The dog's making a noise. The jewelry went missing. So we had to do our own investigation. We found the suspect. And again, our advice to our clients is you must take action, disciplinary hearing, you must prosecute. I don't think we wanted the adverse publicity, so we just asked her to leave. She was then hired by KPMG, who did not do a background check, hired her, and she committed fraud while at KPMG. That's why it's so important to take action against these people. And then we discussed the ethics risk assessment and what was found in the ethics risk assessment to justify why we have this ethics strategy and ethics implementation plan. So the whole idea of doing the ethics risk assessment was to look for the opportunities, to look for the risks, how to help employees recognize ethical challenges, where to go to if they want advice, help. The Institute of Internal Auditors, their new global standards state that updated them. They were effective beginning of this year. And they say to understand governance processes, the CAE must consider how the organization promotes an ethical culture. Then 9.4, internal audit plan must consider fraud risks, ethics programs. So from the planning stage, because often auditors say to me, oh, I'm looking for an opportunity to do an ethics risk assessment or fraud risk assessment. And I say to them, you're going to wait a long time. Because generally with those type of things, there has to be a problem before you're asked to do a fraud or ethics risk assessment. We don't want to wait till there's a problem. So that's why the RA says the internal audit plan must look at what are we going to do about fraud risk and ethics programs. And every single audit, the auditors must ask fraud and ethics related questions. We cannot wait till management asks us to do a fraud risk assessment or ethics risk assessment. By asking those questions, we will get the necessary ammunition to justify an ethics risk assessment or fraud risk assessment. Without asking those uncomfortable questions, we're not going to have any ammunition. And the same with IRBA, SICA. If you look at the updated ISA 240, which comes into effect, I think this year, December the 15th, any audit done after December the 15th, they talk about fraud risk assessments being done, which includes evaluating the client's internal ethical environment. So the point I'm trying to make is, nowhere does it say you must do ethics risk assessments, but how else are you going to assess the risk if you don't do the ethics risk assessment? How management's oversight responsibilities are carried out, such as the entity's culture, management's commitment to integrity and ethical values. How does management communicate with employees? What's its views on business practices, ethical behavior with respect to prevention and detection of fraud? So it's spelled out very clearly there in terms of internal auditors and external auditors looking at fraud and ethics. Then we compile the implementation plan. I use an Excel spreadsheet and I color code it, so at a glance they know blue, leadership commitment, green, governance structure, ties into that same graphic. And then we will list what needs to be done. You can see this has been condensed. I've removed a whole lot of lines. So under leadership commitment, there could be 4 different things to do. Under institutionalization, there will be a lot of things to do under the yellow. And then we will say, when does that need to be done by? First year, second year, third year? Who's ultimately responsible? Company secretary, risk committee, ethics function, HR and ethics function, social and ethics committee. If something else crops up, you add it or move it. You maybe want to pull something from year 3 into year 1. You decide as you're progressing. It's a living document. This is from Rousseau and Van Vuren's book, because you might be thinking, well, what can we get the company secretariat to do? What can we get forensics to do? What can we get internal audit to do, or communications or employee relations? There's some suggestions depending on what your findings are. Learning and development, employee wellness, supply chain management, IT, risk management. Everybody should have a role to play somewhere. Ethics office cannot do it by itself. Then we meet the project sponsor, discuss the draft report. This is the draft report. So I make it easy to read. So there, I do it in PowerPoint. So there's the detailed results, so people know exactly where they are. So if we just go back, we know now we've gone through introduction, methodology, executive summary. What are the detailed results? Organizational culture. And what I do, I bring in pictures relating to that organization. This is a generic picture that I put in there. If I was doing this for Coca-Cola, I would have a Coca-Cola related image there. Often I will go to their annual report or their website to get related pictures. Some don't have very good websites. I would then go to public relations and ask them, do they have any photographs? And then they would give me photographs so that you get buy-in. It's not my report, it's your report. It's got your pictures, your name. You can relate to it. For SA breweries, there'll be pictures of their products and appetizer and Castle Lager and so on. So we start off with basing this topic on King. What does King 5 say about it? Okay, principle 1A, integrity. Members of the governing body should exemplify ethical conduct. And then we say, we ask staff members the following questions. and included a culture comparison. What is your organizational culture? Choose one word. We will then have a comparison, good word versus bad word, and then what are the core values? Do you know what the core values are? And think about it, ladies and gents. This is an anonymous survey. If the people don't know the core values, they could go and look them up before answering. So many of them don't even bother because they know it's not that important, and they choose the wrong values. Because I give a list, choose which are the correct 5 values. So in terms of organizational culture, this is just an example. 141 people chose a positive word, 40 people chose a negative word. So it's 78% positive, which is significant. It's over 75. And 22% perceived negative. That's also significant. It's over 10%. Remember, negative over 10. And then we put it into a word cloud. People like pictures. So the more people that chose a word, the bigger the word cloud shows it. So there were 11 positive words, all in green. I even color coded so people, it makes it easy for them to read. 11 positive words, 8 negative words. So we can see this was a pretty good one. I've had some really bad ethics risk assessments, choosing of words. Bureaucracy was their main problem. A lot of people chose awesome, professional, teamwork, good, excellent. And then I break it down further. How many people chose each of those words? That's why the report ends up being 130, 140 pages, because it's not all cramped onto 10 slides on one slide. And then I show a comparison. I've done a few hundred of these. So the best score that I ever got was 92% positive and only 8% negative. The worst that I've ever got is 88% negative. That's for the whole organization. It includes executives, 12% positive. And then I show this client, where do you fit into it? You are here. That's your company. You're okay. You're above the median, the average. Now, a lot of people have said, but that's just what you've come up with. Maybe you influence these scores. So I like to balance it with what are other people saying. So I go to Glassdoor and I find that company listed there. Now, for those of you that may not know, Glassdoor is where you can go anonymously give reviews about your employer, the good and the bad and the ugly, and rank them from 1 star to 5 star. And tell people what you think of the company and the CEO. So in this case, there were 4 reviews. I did one of these for Anglo American, hundreds of reviews. Because obviously Anglo is a very big company with many, many staff members. This was a much smaller company. So you can see there, they got a 3.6 out of 5, which is 72%. Remember what the score we came up with is 78. So I'm saying it's the same. Confirms what we've come up with. And I don't just use Glassdoor, I'll go to Indeed. This is the same company for 80%. You can see one person's not happy, toxic environment, but generally the rest are happy. So there's Glassdoor, there's Indeed. One was 80% positive, one was 72%. We came up with a 78. It all ties in. Because, ladies and gents, you do get people doctoring surveys to come up with the results that they want. And I'm going to show you that at the end of the session. And then what I do, I list the dimensions. So we're talking about organizational culture. I will list all the risks plus the opportunities, and then my recommendations based on those risks and opportunities. Then we move to the next section, ethics. Start off with the principle 2 of King 5. The governing body should provide strategic direction, be accountable for the organization's management of ethics, creating an ethical culture. We ask 7 ethics-related questions. Are you ethical? Is the organization ethical? Is the country ethical? What would you do if someone gave you an extra 100 Rand, $100? Do you think the people you work with are honest? And so on. This is generally what we find. The vast majority say, yes, I'm ethical. You have some people saying, no, I'm not ethical. Some saying, I don't know. Those are people that are being honest. I work for an ethical organization. I generally have about just over 50% saying no. Sometimes it's 70%, 80%. And then, do I live in an ethical country? Vast majority, no matter where I go, no. Ladies and gents, this is called the self-enhancement effect. I'm the ethical one here. My colleagues are not ethical. The country's not ethical. And then I say to those people, how are you surviving? A general question. I don't know who they are. I'm just saying, how's that 80%, 98% surviving? Because they work for an unethical organization. Imagine what they're seeing and hearing and being asked to do. Marcus says so, that type of thing. You don't live in an ethical country. How are you surviving? What we are doing, we are justifying our unethical behavior. That's what we are doing, ladies and gents. I had to do it. I was in this situation. But if we see someone else doing it, they're a bad person. That's how we are as humans. And again, I confirm, further on in the survey, I ask this type of question. I believe the following individuals are fully committed to upholding the organizational standards of conduct. Myself versus my peers, compliance champions, HR, risk, the board, CEO, directors. I get 90%. Yes, I'm fully committed. My colleagues, 60%, risk management, 70%, self-enhancement effect. In terms of the comments, we do not alter them. We sanitize them. If there's anything offensive that I think the CEO is this or the HR manager is that. But it also gives internal audit an idea of what department could be a problem department, depending on what the comments are. Remember, a lot of times people are seeing bad things happening in other departments. Doesn't have to, if I'm a whistleblower, it doesn't have to be my department. I'm seeing and hearing things about other departments. And I blow the whistle on what I've heard and seen in that department. And then my liaison, the ethics officer, the risk manager, compliance officer, can have private meetings with those people to get more information. Because some people name themselves. They don't have a problem. The brave ones. And then what I'll do, list the risks, opportunities, and the recommendations. Then we move on to the next section, ethics awareness and training. What does King 5 say about it? It talks about training must be embedded through induction, ongoing training awareness, campaigns, including codes of conduct and ethics policies. We asked 4 questions. Is there regular ethics awareness training? At least once every 3 months. That's what I call regular, not once every 3 years. What communications have you been exposed to? Who do you rely on, or what do you rely on to get information about the code of conduct and ethics? Did the awareness training course meet your expectations? Ironically, I was at one organization. They hired celebrities. One was a politician and one was a bishop in the church to come in and do ethics session. And when I asked people, what was your opinion? 95% said totally useless, terrible, learned nothing, embarrassing. And then I asked them, but what about your ethics officer? Oh, that was brilliant. He answered all our questions. That worked. So I said, ladies and gents, just because it's a celebrity doesn't mean to say it's going to be a success. Rather just stick with your ethics officer who's getting good results and is trusted. Then we would list risk, opportunity, recommendation. Then next section, whistleblowing and case resolution. Very important. All very well to blow the whistle. Are they investigating? Are you seeing resolution? Is action being taken on the allegation? Or do they come to find the person who blew the whistle? That often happens. Who's the whistleblower? Instead of focusing on the allegation. And we then discuss, what does King 4 say about? It's actually King 5. I need to change that. Those are the 5 questions. Are you aware of the anonymous whistleblowing channel? Are you aware of the whistleblowing policy? Has someone you worked with asked you to do something illegal or unethical? And then, of course, comments. What did you do? What would you do? To what extent do you feel comfortable about reporting? If you observed something, who would you report it to? Some people say, I wouldn't report it. And comments, why not? Well, the last few people that reported it got fired or victimized, or nothing was done. Even worse. Do you think reported cases of unethical behavior are resolved successfully? Yes, no, comment. Same thing. Good, the bad, and the recommendation. Then rewards and sanctions. What does King 5 say about rewarding and sanctions? Yes, they talk about it. Very important. Remember, ladies and gents, we are human beings. What motivates us? Carrot, stick. That's it. Nothing else. Carrots and sticks. It's just that there's different carrots and different sticks. Are staff members who prevent unethical behaviors rewarded? Vast majority, I don't know, with a whole lot saying no and 6% saying yes. What a disaster. Do you think there's appropriate punishment for unethical behavior? 50-50. Don't know. Some say yes, some say no. Again, we'll list the good, the bad, and the recommendations. And then recruitment. What does King 5 say about recruitment? Application of the organization's ethics standards to the recruitment, performance evaluation, and reward of employees, as well as the sourcing of suppliers and general engagement with external stakeholders. That's what the King 5 is calling for. Regular reference and background checks are performed as part of the hiring procedures. Agree, strongly agree, disagree. What about reference checks on staff members? Keep in mind, ladies and gents, that Standard Bank and Nedbank were hit with ransomware attacks 2-3 years ago. You would think that our banks would have state-of-the-art security, and they do. Most of our banks are utilizing a company called KnowBe4 for their cybersecurity, who are very effective. But then they go and hire third-party vendors. They don't check them out, and they give them open access to the bank, and that's how the ransomware attack happened. You need to check not just who you're hiring in terms of employees, but your vendors. Who are these people? Can you trust them? What is their security like?
Do you see the question? Just checking.
Yeah, I'm just having a look. How do I deal with my ethics consulting to owner-managed businesses on accounting and tax? I would see it as an extra service, depending on how big your clients are, what they've already done. It's something you could say, look, are you aware of this? It's something that, have you considered this? Are you worried about ethics? Because we all can see, ladies and gents, things are getting worse. It's not getting better. And I like to be an optimist, but I'm also a realist. And things globally are getting bad. I've got family who stay in America, in Australia, New Zealand, Canada, England. I just hear bad news. So ethics, as I mentioned earlier, is the foundation. It's the root cause of most of what's going on. So I think most people, business owners, would want to know, what is my culture like? Is it good? Is it bad? Do I have problems? Let's try and fix those before focusing on fraud that I may have or may not have. Ellen, you're welcome to drop me an email if you want to chat about it. Or anybody else. I left Grant Thornton about 5 years ago, and the ethics risk assessment is my most fulfilling work. I do anti-fraud training. I do open source intelligence. I just get frustrated that I'm showing companies their problems. And that's how I'm going to end today, to show you it's like, oh, thanks for telling us. I would love to see people who are committed to fixing it. I'll tell you more about that when I get to it. Again, recruitment, good and bad. What are the recommendations? Code of ethics. What does King 5 say? Governing bodies should consider and approve policies, programs, codes. These should include establishment of an ethics program, which comprises assessing and effectively responding to the significant ethics risk and opportunities. There it goes. King 5 is saying we should be doing ethics risk assessments. Include the establishment of programs for the prevention and detection of corruption, fraud, money laundering. Absolutely. Those are the questions that I generally ask. I've already mentioned these. Have you read and understand the policy? Most people say yes. And then I ask, are you allowed to accept gifts, have remunerative work? And we get all these strange answers. And then if something is legal, does that mean it's also ethical? Often people will say yes. It's not, ladies and gents. Something can be legal but not ethical. And I go back to Nazi Germany. It was legal to victimize people of different race or religion. And that's why so many Jews left Nazi Germany in the 30s. And even non-Jews to say, I don't want to live in a country that victimizes people. And they left. It was legal. Burn down those businesses. Attack those people. It's okay. Codes and policies. What are the good? What are the bad? What are our recommendations? This now is the summary of the review of the ethics policy. So I take the code of ethics, code of conduct, whatever it is, ethics policy, and I look at these components. Each one is weighted. This is global best practice. Most important weighting is the risk topics. Have you covered all the risk topics? Sexual harassment, fraud, money laundering, gifts, conflicts of interest, and so on. Then we go to tone at the top. Then readability and tone. I've seen the most boring things, ladies and gents. Boring black text on white paper. I don't want to read it. Nobody wants to read it. And it's small. You can hardly see it. They've crammed it in all the pages, compared to the brilliant ones where it's interactive and you've got pictures and links on videos and messages from the CEO. And wow, I want to read that. Presentation and style. Are there graphics? Are there different fonts, different font sizes? Does it mention reporting and non-retaliation? That's a 10% weighting. Is there value statement and commitment to stakeholders about good ethics? Is it publicly available? Some clients, I cannot find this document. I have to search and search. One was a municipality, Buffalo City Municipality. I could not find this document. And eventually the internal audit manager found a copy that was a draft signed 10 years ago by the municipal manager who's no longer there. But it's not just municipalities. I was doing work for one of the German insurance companies, obviously head office in Germany. And you think, oh, Germans, they're doing things properly. To try and find this thing, I had to go to Google and ask it, please find me this code of conduct. So I had to work backwards. I couldn't find it by just going to their website. It's like hidden away. And in learning aids, is there anything that will teach me? Are there any ethical dilemmas for me to solve? For example, SA Breweries had one of the best codes of ethics where they had ethical dilemmas in the back relating to gift acceptance, conflicts of interest, moonlighting. Comes to life. And it's not a generic copy and paste from some other company, all related to SAB and how they do their work. So all SAB employees get given free beer. Every year they get cases of beer. My contact would phone me up. He was the risk manager. Come and get your case. And he would give me a case of beer. It was a sad day when he retired. And the code of ethics says you will, as staff members, you are all given X amount of beer, depending on your seniority. You can drink it. You can give it away. You can do whatever you want with it except sell it. You cannot sell it because some employees would not try to make money out of it and sell it on the black market. And they catch them, they fire them. It's clear. And those are the type of dilemmas that they would have in their code of ethics. So this particular case, you can see the company hasn't scored very well. They scored 56 out of 100. So code contains some good elements, but enhancements would increase its effectiveness. I've had ones that are in the bottom. Code is not effective, somewhat effective. And I go through each one. This is what you need to do. In most companies, HR is responsible for that. Then we've got our conclusion. So obviously, I'm asking 30 questions in 8 categories. There's a lot to take in. I don't want to overwhelm the client where do I start? It's overwhelming. I'm not going to do anything because that's what the end result can be. I'm not going to do anything because it's so overwhelming. So we go to the Global Business Ethics Survey. Top 4 indicators of ethical risk in the workplace. How much pressure is there to compromise ethical standards? It's one of the questions that I ask in the survey and in the face-to-face meetings. Are you observing misconduct? If so, what type of misconduct? Are you reporting the misconduct? Is there any retaliation? And they've added a 5th one more recently. What is your ethical culture strength? So that is what I focus on when I report back to the client. And I plot it in a radar chart. This is an actual client. So you can see at a glance, they can see, okay, ethical culture is nearly 80%. We're heading in the right direction. Pressure to compromise, very low. However, there is observed misconduct with at least half the respondents, 50%. Hardly anybody's reporting because of lack of psychological safety, because of perceived retaliation. That's where you need to start, client. That's those 3 things. Then you can focus on the other things. You need to prioritize. Like anything in life, we prioritize. Danger of not speaking up. I'm sure you all know the Challenger rocket that took off and exploded. Technicians knew the danger. Taking off too early in the morning. The rubber O-rings may have contracted because of the cold, which means fuel could leak. So they said, take off later in the day. No, we can't take off later. We've told the press they're going to be there. It's got to be at 5:30 in the morning. So they took off petrol leaked and the rocket exploded, killing 7 people on board. And that's what we say. This is part of our report to our client to say, could you be the next Challenger disaster? So Challenger sits under NASA. Interestingly enough, they've got they had a culture survey done at that stage. NASA was a great place to work, smart people, lofty goals, best technology available. NASA's culture score was high, except for 2 aspects, 2 crucial aspects. Organizational support, the extent to which employees feel supported in their efforts. The culture was, don't come to us with bad news. We only want to hear problems have been solved. So the culture did not support speaking up. That's why when the juniors said to middle managers, we don't suggest you take off early in the morning, it didn't go any higher than them because the bosses didn't want to hear bad news. The cultural attribute was, tell us when you've solved the problem. Don't come to us with a problem. So deviance was normalized. That's the danger. And there's a link there if you want more information on NASA. It makes interesting reading. And then comments. As I mentioned, whatever comments we get, we put them into 3 categories: people, process, and technology. And then miscellaneous that may not fit into those. So in this particular case, that we had 439 comments relating to people, 234 to miscellaneous, 122 to process, and 1% to technology. So what you find in most cases, the technology is there, the process is there, the people are the issue. And then management comments. Those are the questions that we asked. What are your concerns around unethical behavior? Is there pressure to compromise? Your opinion of the new whistleblowing mechanism. At one client, the person said to me, I'm a manager and I don't understand the system. How do you expect my juniors to understand it? I said, but didn't you have any training? And they said, yeah, well, Tip-Off's Anonymous, they were here. Some of us didn't attend. I don't just blame the trainer. It's also the people that are attending. They don't see this as important. They've got other priorities. They listen with half an ear, or it's online and they switch it off. You know, it takes 2 to tango. Outcomes of our management consultation. So I give generally the perceived ethical risks from our interviews in procurement, in ethics, in internal audit, HR, IT, finance. Then the maturity matrix, which we've already discussed. And then we, if our sponsor is happy, we compile the EXCO feedback slides and present to the various committees. Duration is normally 30 to 120 minutes. One client, which I'll get to now, asked for 3 hours. I could see they were serious, but I still don't see much action, unfortunately. But I'll get to that now. So yeah, 30 to 120 minutes where I run through it, answer questions, and then present to various committees. So what should happen next? Those ethics risks should now be incorporated into the organizational risk register. So whoever the risk manager is, chief risk officer. So that should be a joint effort with the risk department and the ethics department. Examples of some of the more serious ethical risks that I've seen. Perception that the CEO doesn't take ethics seriously. We're never going to win if that's the case and it doesn't change. No ethics ambassador, no ethics officer, low attendance to the ethics training sessions. Ethics review committee has not been appointed. It's on the cards. There's no integrity pacts with suppliers. So an integrity pact is to say, okay, we're hiring you as a vendor, but please, this is how we want to do business. Please sign this integrity pact. You can Google integrity pacts. Transparency International's got a whole booklet on integrity pacts. You can also have staff pledges. You would have seen in that Tata video, staff members were pledging. I pledge, the arm was out. Because often what has happened, employees have said, my boss never asked me personally to do this or to report any wrongdoing. We have to make it personal. So we ask people to pledge. I've got examples of Nashua. Every employee signed a pledge board. Examples of the FIC and Centurion, where every employee got a handprint, palm print, printed their name under their palm print and signed it. I pledge to keep the FIC free of fraud and corruption and to report any wrongdoing. There it is. People can't say, I didn't know. The ECI, global organization. I'm a member of the ECI. Why I'm bringing this in is because the city of Austin in Texas makes all their audit reports public, ladies and gents. You can go there and see audit reports, their ethics risk assessment, investigations. They said, we are transparent. We've got nothing to hide. Oh, isn't that refreshing? The press are invited there. They come and publish articles, talk about transparency. That was just a short video where I'm showing that they even put the video. Let me show you just the beginning of it. They published they videotape the audit manager presenting his findings of the ethics risk assessment.
Our next item is from the auditor's office, the citywide ethics assessment, which assessed the effectiveness of the city's ethics and compliance program. And we have Patrick Johnson. Good morning.
Morning. Yeah, I am Patrick Johnson, Assistant City Auditor. Pleasure to be here today. I'm presenting the results of an assessment of the City Ethics Program. We hired an external expert, the Ethics and Compliance Initiative, or ECI, to conduct this work. And really, the first step is, well, what is ethics and why is it important? Ethics is a cornerstone of integrity. It provides a framework to help guide behavior. But really, what does that mean in terms of how the city operates and provides services to its residents and everyone who accesses our services? Well, strong ethics can help city officials and really every employee make better decisions each day in the public interest. Strong ethical environment promotes values such as honesty, fairness, trust, respect, and accountability. Moving to the assessment of Austin's program, ECI is a recognized expert in ethics and compliance best practices, and they help organizations identify how to build and sustain strong ethics programs. ECI followed a grant staff. This really served as a self-assessment of Austin's ethics program. The process is really related to the ethics program. Was a clear split in perspectives about how well the city is doing related to ethics. Just across the board, staff perspectives were consistently lower than executive perspectives.
So you get the idea, full transparency. So there needs to be a phase 2. So once we have looked and done the ethics risk assessment, presented it, we now need to say, okay, what do we need to do to fix this? And the recommendations are in the report. There's the 3-year implementation plan. What I found when I present to most boards and committees, they're shocked by the findings. The one CEO said, are you available tonight? Yes, let's go to dinner. We need to discuss this. We had our dinner meeting, and that was the end of it, ladies and gents. I don't know if they've done anything or not. So Let me show you the process. I've read and understood the ethics policy. 90% say yes. These three questions, I get about 1/4 saying yes, 1/4 saying no, it depends. So obviously they haven't read it, they don't understand it. I ask, what are the types of unethical behaviors that you are seeing? It's anonymous, I'm an outsider, people open up. Biggest issues, employee wellness, intimidation, bullying, victimization, sexual harassment. Next potential issues, perceived conflicts of interest, favoritism, nepotism, cronyism. So much for the values of trust, respect, integrity, and accountability. It's not aligned with the values. Client, you've got a problem. Yes, we've got a problem. What now? Okay. Remember that? Yes, okay. Psychological safety is missing. There's misconduct. It's not being reported because of a lack of psychological safety. Get the psychological safety right, the people observing the misconduct will start reporting it. Half your problem solved. So client 1, I performed the ethics risk assessment, gave feedback, did 2-hour feedback awareness sessions for employees. The client said, no, all our employees need to know what was the outcome of the ethics risk assessment. We then did separate feedback for management. What came out of it was that whistleblowing process was not understood that well. So we asked Tip-Offs Anonymous to come back in and do their session. I then did dynamic facilitation sessions with managers and directors. And they created an action plan. Not my action plan, their action plan. This is how it went. Okay, so 2022, 140-page ERA report, strategy, done. 2023, ethics awareness training, Tip-Offs Anonymous sessions, feedback to executives. 2024, meeting with directors and managers. They came up with an action plan. They created it. It's called dynamic facilitation. I want buy-in. Otherwise, if there's no buy-in, people aren't going to implement. 2025, we're 3 years down. We were supposed to do another survey. Hasn't been done because the action plan hasn't been implemented. The second ERA was planned for this year. Not going to happen. So dynamic facilitation is not me sitting here saying to you, this is what I think you must do. I have a meeting with the directors to say, these are all the issues that have come up. Where do these perceptions come from? Are they valid or not valid? Because if they're not valid, then what's the point of trying to action them? No, they're valid, yes. Okay, so tick, they're valid. What are your solutions? One person will say this, another one will say that. Another one will have a concern about that solution. So other people will give any other points, more data, more info, and then we come up with a solution that everybody agrees on. So it's their action plan. And still nothing, ladies and gents. They've wasted all that time and money. Another one that I did. Ethics risk assessment done, 2024, Q3. Then I presented to EXCO and the ethics committee. I had not presented to the board. They said it was in another country, and I was basically, it's going to cost money to fly you out here again. When I was already there, but it didn't suit them, I understand that. So just, we'll let our ethics team present it. I'm the one that did the project. I'm the best one to present it. But anyway, you want to save a air flight? Fine. So I didn't present to the management committee. It was December. I then followed up in the new year. What was supposed to happen in Q1, implement the code of conduct changes, give staff members feedback, and do facilitated management sessions like you did with that previous client. Hasn't been done. Q2, we were supposed to do the action plan. Hasn't been done. The ethics team only presented to the board in Q3 last year. So nearly a whole year's gone, ladies and gents. The momentum's gone. Finished. They wasted them time and money. Who wants change? Yes, yes. Who wants to change first? Like that book says, change is good. You go first. No one wants to go first. That's what I found. This is what people generally say to me. We're so tired of these projects. If I have one more survey to do, we never see any changes. What a colossal waste of time and money. This is the feedback that I get in most of my one-on-one meetings. I don't bring up the word psychological safety. The people I'm interacting with do. We need psychological safety. This is word for word. I've copied and pasted it. People should be free to talk without any fear of repercussion. I do not see transparency with management. Communication's lacking. We just hear decisions made and we must accept those decisions. Lots of corridor talk, but nothing being reported. If you want more information, Amy Herman is the expert on psychological safety. I use a lot of her material and videos in my ethics risk assessment training day. Google made use of her. They called it Project Aristotle, multi-year research initiative to find out what makes teams effective. In order to have impact, effective teams, work has to be meaningful. There needs to be structure and clarity. We need to be able to trust each other, depend on each other. If there's no psychological safety, we cannot. Four stages of psychological safety: inclusion, learner safety, contributor safety, challenger safety. So inclusion. Am I being included or excluded? Oh, you've got nothing worthwhile. You're a junior. Junior may have something important. If we're a team, if we're a department, we should be including everybody. Learner safety. Do leaders offer constructive feedback? And is experimentation celebrated? So many people don't want to take risks because I'll be laughed at, I'll be condemned, so they don't try anything new, and we wonder why we're stagnating. Contributor safety. Empowerment and ownership take center stage, fostering collaboration, leveraging strengths. So many companies that I've worked for, they wanted robots. We must all be the same. Instead of saying, hey, your strength is this, your strength is that, work together. But instead they wanted everybody to be the same. We'll never be the same. And then challenger safety. Can I challenge without being shot down? And of course, if I'm going to challenge, I must do it in a respectful manner. Respect and be given permission to challenge. What do you think? Tell us your opinion. No, don't laugh at the people. We don't victimize them thereafter. We take what they say seriously. Now, when people hear psychological safety, a lot of times they think, oh, well, if I'm going to be the manager and I got to make sure there's psychological safety, I have to be nice to everybody. No. It means they must all get their own way. No. It means they have to have job security guaranteed. No. It means we have to choose between psychological safety and performance. No. They still have to perform. And if they don't perform, get disciplined, and they're out. It just means they can speak up when the time arises. That's all. That's what psychological safety means. The standards still remain high. People still have to achieve. It just means I've got an idea. It might be a stupid idea. It might be a good idea. Who knows? Maybe my idea is the seed that gets planted. And then my colleague says something, that's the water, and the seed starts growing. And then before long, we get fruit. Brunt Pretorius, a very interesting book. Remember, he went from Toyota to McCarthy, bankrupt McCarthy. And he said, 18 months into my job, I got a surprise. We weren't doing well. And Brian McCarthy called me in and said, I'm going to get rid of you. You came here, you were going to change things, you've changed nothing. He says, please give me a chance. And Brian McCarthy said, I'll give you 6 months. He says, I went home and I did introspection and self-analysis. What is our first reaction? We want to start blaming people. Who can I blame for this? He said, no, I'm starting with myself. And he said, I needed to change. He asked some of his close directors, how can I be better? And they said, well, look, you've come here from Toyota, which is a manufacturing industry, and your talk is manufacturing related. We are retail. It's hard for us to understand you. You need to start communicating in retail language. Brunt Pretorius said, thank you for telling me. I will work on that. He changed, ladies and gents. Their share of the new vehicle market went from 11.8% to 13%. In those days, that was 110 million. In today's terms, it's 2 billion. He's now a hero. Brian McCarthy is glad he kept him. But he did introspection. And he said, emotional intelligence and psychological safety are the key parts of effective leadership. You cannot have psychological safety if you don't have emotional intelligence. They work together. Ironically, one of those clients that I just showed you where there's been no progression have had emotional intelligence training before I even got there. So much for that emotional intelligence training. I don't think it worked. I'm going to show you a short clip where Brunt Pretorius was interviewed, and he says integrity is what he calls the crucial currency of leadership.
South Africa has many individuals who have life stories that inspire. One of those individuals is Brunt Pretorius. Join me for Breakfast with Brunt, a man who was responsible for one of the biggest corporate turnarounds in our recent history. Something that you alluded to was moral intelligence, and that is in the area of self-leadership. I want to ask, how important is moral intelligence and ethical leadership when we take it out of ourselves, when we start leading others? And what is the difference in outworking between ethical leadership and non-ethical leadership?
Yeah, in my opinion, the most essential attribute that a leader should have is integrity. I like to describe it as the crucial currency of leadership. So I say leadership is not about charisma. Leadership is about character. Leadership is not personality-based, it's principle-based. Leadership is not a way of behaving, leadership is a way of being. Ethical leadership is a prerequisite for effective leadership. When people behave in an unethical manner, then the followers will lose all confidence in the leader, will not trust the leader. And a leader who's not trusted has no credibility. And if you have no credibility, you have no influence. And if you have no influence, then you cannot lead. Then the only way you can lead is by using your positional power. And if you use your positional power, you get no real commitment. You just get reluctant compliance. So trustworthiness is a prerequisite for effective leadership. So set your
Reluctant compliance. We see that often. I don't want to do it, but I guess I have to do it. Leadership failures. If the CEO doesn't lead on ethics, the program is just window dressing. Ethics program without leadership commitment is like a car without an engine. Culture is not what you proclaim, it's what you permit. And only leaders can set those boundaries. When leaders are indifferent, even the best ethics initiatives will wither. Ethics cascades down from the top. Without the board and CEO commitment, nothing sticks. People say to me, what if the CEO is ethically indifferent? Well, we don't have to wait for the CEO, ladies and gents. But you get good CEOs and bad CEOs. We don't need an official announcement. Every team can create its own microclimate of trust, one team at a time. But that takes courage. Or I tell people, if it's not working, move on to find an organization where ethics is taken seriously. I like this comment I saw on LinkedIn. Mustafa Mukhisa said, governance is not control, it is courage under pressure. Africa's biggest governance crisis is not corruption, it's cowardice. We are not short of intelligent people, we are short of the brave ones. So let me end with a bad example. European Central Bank. Staff accuse the ECB of gaming the survey to limit negative feedback. So they do a survey, it's very negative. 70% of respondents said they'd been shouted at, spoken to in an aggressive tone, faced offensive gestures, experienced behavior that made them feel discriminated against, faced humiliating, degrading comments, unwanted conduct of a sexual nature, felt isolated, excluded, rejected. Oh. So this year, the ECB does the same survey but leaves out those type of questions. we don't want to hear the bad news. When asked about the mismatch, ECB spokeswoman said, we have taken actions, but it takes time to see results. These are complex issues that cannot be solved overnight. Really, psychological safety cannot be solved? If you want it to, it can, ladies and gents. One staff member asked on an anonymous staff chat room, questions are asked only if the expected result is positive. Now that the previous survey showed the ECB has a problem, it's better to bury it and never talk about it. The governor of the bank is a woman by the name of Lagarde. She was ranked as the second most powerful woman in the world behind Merkel. I'm proud and honored to lead the institution. She was responding to a question about the findings published by the ECB union. So it's the staff union that did the survey. More than half the respondents rated her performance as very poor or poor. Surveys qualitative responses. So it's not anonymous, it's qualitative, face-to-face with the union. Suggested some staff believe she had created a negative atmosphere at the central bank. Lagarde now says, we are now going to do our own surveys in a way that we can trust. No, they want to game them. They want to change the questions. Survey reveals surge in burnout and suicidal thoughts amongst ECB staff. Favoritism, job insecurity, low trust. Wow, I'm glad I'm not in that environment. Ladies and gents, we are done. There's my contact details on the handouts. Any questions, any comments?
Thank you,
Well,
Mario. I want to also just share something quickly. There we go. I'm just sharing a quick QR code to try to do a satisfaction survey, and also to there's a question in that where I'm preparing or in contact with the IFRS presenters to just check these three topics he's presented. He's presented 3 topics. He's asking which of those 2 should he present on. So there's a few other questions as well, and just general survey. It will also be on the email when we send out the notes and recordings to those who still need to catch up and who have left. But in the meantime, it's still there for now if you want, for the next few minutes. And yeah, there's a few guys saying thank you. Mario?
Thanks, Cheryl. Thanks, Kevin.
All right, cheers, guys. I'm going to leave that up for a minute or two. I don't know if there's, while we wait for any questions, if anyone has anything.
So if there's any questions, please put your hand up or put it in the chat room. Just like to, Mario, thank you so much. Very excellent, well prepared, really food for thought, because at the end of the day, ethics is just a word, but can you live by it? Can you actually use it? Are you ethical? You know, I think those are introspective things that need to be thought of before you launch into going to the whole organization and asking everyone else the same question. It's a tough area. And I think it goes far beyond the fraud. I think there's other things about ethics that are equally or more important in an organization. Anyway, thank you very much. I don't know if there's any questions. I don't see any. And thanks for everyone who joined this afternoon. Thanks for your time. And your certificates will be on your way within a couple of hours. And Mario, once again, thanks for the well-prepared session. Thank you. And Danny,
Thanks everyone
anything
for
you need to
attending.
say?
No, it's all good. I'm just monitoring. Everyone's just thanking you, Mario. And I haven't seen any questions. So yeah, now that we're nearly done, we're gonna end it soon. This survey will be at the end of your notes that I send later on today. All right, thank you, everyone. Hope you have a wonderful afternoon.
Good night.
Thanks, all.
Cheers.
Cheers.